Hi there, traders. This is Brad Gilbert with today's trading action. All right, now there's a few things to just run through here as a bit of geopolitical tension really creeps into the market. Weaker numbers across the board globally, leading to uncertainty in global growth, and that's leading to a bit of a sell-off in the commodity currencies, CAD, Aussie, and Kiwi. The head of the Hamas was assassinated yesterday in Tehran, causing issues. The Bank of England have cut rates as expected. But we did see a pretty aggressive move, right? So let's just have a look where everything is, because the markets are getting a little bit disjointed. And you look at the price action here on the dollar index, you can start to see where it's like, what is going on? It's like down, it's up, it's down, it's up. Now, what did make sense was the Bank of England cutting rates. Okay, I tell you what, I was a bit surprised at how big the move was. Once again, those interest rate probabilities giving us insight into what the market sort of is positioned or what it should happen, right? So I think we can learn how to use those a little bit more effectively as we go forward. But sterling sort of crapped out, and then it sort of almost basically rallied back to where it was pre-release, right? And then the next move down is the dollar sort of kicking into gear on these geopolitical events. Euro, we're starting to see, like on a lot of these instruments, right, like these little cheeky false breaks. And they aren't holding up too long. Like even sterling had some. Aussie sort of looked good for half a day and then back to the downside, as the commodity currencies got hit. So all we're doing at the moment is we're sort of not really going anywhere, right? And as I said, with that geopolitical tension in the Middle East, tell you what, and the global growth situation, it's sort of getting a bit more ground. You might see dollar Swiss and dollar yen just move to the downside as people go and park their cash in the safe havens, the yen and the Swiss, right? So this is where we are, and it's I tell you what, it's we're looking for trends, right? We're looking to get into trends and trending markets. And when you look at the what's going on across the board here, we do have a couple. Like the safe haven trade does make sense on a lot of levels. Obviously, the Bank of Japan hiking rates. The dollar Swiss is moving down, dollar yen. So just keep an eye on that safe haven trade, because to me, that could be something to really rip into, right? Because you're starting to see like sterling drift back into the range. So with this sort of movement, all we're doing is adjusting the trend lines. And most of the major pairs now are sort of back mid-range as we try and work out where the next major move is, right? So and it's not, I wouldn't say it's overly great news for us. If anything, shorter term trades, and just be aware, like we have today's trading, right? So dollar CAD is the sort of one sort of standout here, which is breaking higher. I mean, dollar yen, with everything that's going on, looks like a natural trade to sell dollar yen, and that's just with the safe haven trade. But people are starting to run into the dollar again. As this sort of international, global unrest sort of unravels, right? So don't forget the media will blow this up as much as they can. But the trouble in the Middle East, it could escalate and sort of go across the board. Apparently, they're bracing for a whole big backlash on Israel. That is just like a left field event. It's like some sort of crazy movie, right? But it's actually real and happening. So if you have a look across the board, we're going to sort of focus on the sort of key aspects of what's going on now. And what I mean by that is keep an eye on the data, right? And you know what? The Fed September rate cut has to be it's a sure thing, right? The ISM manufacturing data weaker than the forecast there, right? And the manufacturing employment down. Everything's starting to look very smelly in the US, right? And funnily enough, if everything goes really pear-shaped, that's the dollar actually rallies on the back of that. So just be aware, it's not as simple as it can be sometimes. Now, just looking at where we are today. Now, have a look at the Swiss CPI numbers. They are expecting weaker numbers, right? Month on month, year on year, pretty much as expected. But the Swiss, okay, if I just give you a quick look at the interest rate, sort of where the setup is at the moment for Swiss. National Bank cut, okay, 70% factored in a cut, right, at their next meeting, 26th of September. That's a fair way off, but weaker CPI numbers will confirm that, right? Do we buy dollars and sell Swiss? Well, we've got that conundrum with the safe haven trade, right? So it's a little bit trickier than you think. And with the non-farm payrolls coming out, right, and this sort of geopolitical crap that's hanging over the market, it's going to be like looser than you would think usually, right? So non-farm payrolls, the key number, unemployment rate, and then the secondary components would be the average earnings. So unemployment rate 4.1, that has been drifting higher, sort of trending higher for some time, right? Or for the last, say, 3 months. Reuters poll for the non-farms 175, a decent range there. Okay, we get any sort of numbers that are below the general range of the forecast there, it's going to be very tricky to manage the trade, right? If they're buying dollars because of all the sort of the prospects for global growth are dropping because all the manufacturing numbers, all the production numbers are all dropping across all the developed countries. Well, it's a tough one, right? So to me, if anything, right, a little bit out of the box, stronger numbers, right? Like a better number, 4%, and say a number up towards 225 really goes with that short-term dollar topside move, right? That's all I can think of. But what we are doing now, we're sort of clutching at straws, right? We're trying to make a trade fit as opposed to just look for the natural trade, right? So to me, just be careful, right? I'd come back and refresh your charts, like just go through the process and focus on the trading process. Don't get too caught up in the news and get sidelined and think, oh yeah, this is what the news is telling me. The news is there to sell advertising, right? So don't get too caught up in that. If anything, sterling's broken down, makes sense. You come back and look at the Aussie or the commodity currencies, they are caught up in like the Chinese weakness situation, but then a drop off in global growth, it would hit the commodity currencies, right? Because if there's no growth, no one wants to buy all their crap to make things. So, right. And to be honest, this is starting to get a little bit tricky just at the moment, right? The noise around the geopolitical events can settle very quickly, but just be aware that there's, we've got the Donald sort of hanging around US elections, etc. But focus on the key aspects of what we've seen this week. And that is the Bank of Japan have hiked rates, right? The carry trade is doesn't look so good anymore, right? So we might see this dolly end of the downside. It makes sense fundamentally, makes sense on a safe haven sort of prospect as well. So maybe, you know what, the yen crosses or the yen is where you should be looking, right? That's just on the face of it. Don't get too carried away with the non-farm payrolls. It is going to be a bit of a basket case. We've seen lately how wild the liquidity is. And if you get one variable up, one variable down, this is you're just going to get whipped into the trade, whipped straight back out. But if you are looking at it, keep an eye on the unemployment rates and the non-farm payrolls. They're the two key numbers, right? All right, guys. As I said, it doesn't get much trickier than this, but keep your wits about you. I would keep your powder dry. Let the aggressive numbers flow through, and then see where the dust settles. Right? It's much easier to know what's going on after the event, and then we can come back, to the daily charts and try and sort of get some trending trades in play. All right, guys, have a good one. All the best. Cheerio.